When do you sell your stocks exactly? Oh my goodness. If I had $1 for every time I've been asked this question over the past few weeks, I might be richer than Elon Musk. It has been insane, like in YouTube comments, in Stock Hub, in my private group, like in DMs on Instagram. Like I have seen it everywhere the past few weeks. You guys want me to talk about when to sell a stock. So I'm like, okay, if this many people want this, we're gonna put this together here today, guys. So I'm gonna share from my perspective exactly when you should actually sell a stock or your stocks in general, okay? I hope you guys get a ton of value out of this video here today. I know it's one that's on your guys' mind, so if you don't mind, smash the thumbs up. It helps out the YouTube channel in a massive way. This is gonna be a super valuable video here today. This is gonna be, I'm approaching this video like something I would for like my private stock group or something like that. Like just give out a crazy amount of value, give my full perspective on this, try to change mindsets around this, because it's not just about like trying to, perfectly time it in terms of like, I got to get out of this stock at that time. It's about getting in the right mentality, the right psychology around selling a stock. And just a lot of people just don't have that mindset right for selling stocks. So yeah, I hope you guys enjoy this as always. If you want to join Stock Hub, it's absolutely free to do so. I'll probably have that as a pinned comment. If you want to try to apply for my private stock group, I'll probably have that as a pinned comment as well. All right, guys, let's start getting into this, okay? So when to sell a stock, all right? So first thing I've noticed is there's a broken stocks mentality around selling stocks, okay? And I've noticed this from an immense amount of people, okay? A lot of people feel like they have to sell their stocks to take their profit and run. I gotta take my profit and get out of this, okay? And I just can tell already people are looking at it from a perspective of trying to time things out short term, and they're not even really thinking about a stock as an asset, okay? When you buy into a stock, you are buying actual ownership in a corporation, okay? Like literally, that's what you're buying. When you go buy one share of Apple stock, you are now part owner of Apple Corporation. Mind you, it is a very, very small percentage if you buy one share, but nonetheless, you are part owner of that corporation. If you go buy one share of Tesla stock, you are now part owner of literally Tesla Corporation, okay? And a lot of people aren't even thinking about it in terms of they're buying an asset. They're looking at it from almost like a gambler's mentality. Like, I gotta get in, gotta get out of this stock real quick or something like that. And I can tell you that, guys, that's just the wrong approach. You are buying an asset, okay? And more than likely, this asset you're buying, if it's a great company, it's the most valuable asset you'll ever buy in your life, okay? It's way better than cash. Where's cash value go over time? Down and down and down. It's way better than buying most real, like if you buy a great company, like the gains you'll get versus buying a real estate property, you can't even compare them, okay? You bought Apple stock 10 years ago, 5 years ago, 20 years ago, it's way better than any house in the United States of America, okay? In even the best cities possible, okay? And so you need to start looking at this as you're buying the most productive asset you likely could ever buy in your entire life. And that really needs to be the approach. You're buying an asset, don't just look at it as, I gotta take my profit and run, gotta get out of this, okay? It's a wrong approach, okay? Other people are looking at it as it's just stock ticker symbols and numbers. It's not. It's ownership in corporations, okay? And if you're looking at it from that perspective of it's just a ticker symbol and numbers and things like that, I think it's just completely the wrong approach. That is more of a gambler's mentality. That is more of a short-term mentality. It's just like everything I kind of preach against in the end, okay? You buy into NVIDIA Corporation, you want to become a part owner of that corporation. You want to buy into that asset because you believe NVIDIA is going to be a huge company in the future. You go buy AMD stock, it's because you believe in AMD's future and you believe AMD is going to be a lot larger company in 5-10 years than it is today. You believe in it, okay? This is what it's about, all right? Some people say, they look at it from a perspective of like, I should have sold when it was higher. And so many people are worried about exactly timing out when to buy a stock because they don't want to go through that pain. It's a pain when you look at your account and you see a stock you held and that stock used to be a lot higher and it drops 20% from its highs or something like that. And you look at it and you're like, oh, Why didn't I sell out, last week when it was way higher, or a month ago? And they don't want to go through that short-term pain of being able to look at themselves and say, I didn't time it out perfectly, okay? This is another one of those, you're looking at it from more of like a gambler's mentality. And I just think this is completely the wrong approach when you're stock market investing, okay? I live mostly in Las Vegas, Nevada, okay? And as somebody that lives in Las Vegas, Nevada, I can tell you, I'm recording this in my Arizona house, by the way, but as somebody that lives in Las Vegas, Nevada, I have friends and family that come into town all the time, right? And guess what friends and family want to do when they come to Las Vegas, Nevada? They want to go down the strip and get a little action in, okay? They want to play some craps or do whatever, okay? So when we go down there, and you start playing some craps or whatever game you're playing, okay? There's certain times where you might be up big. And you might say, oh my gosh, I've got to go ahead and maybe think about cashing out. But then you don't cash out, and then you start losing some money. You're like, dang, I should have cashed out. And you start, saying, oh, why didn't I cash out, 3 games ago or 5 games ago? Because you start like losing some of your gains, and you start like having this negative mentality. In stocks, you should not have that mentality, man. This is not like a gambler's paradise. You should really be looking at it from a perspective of this is business. This is business. You're making business investment decisions. You're trying to buy assets for fair valuations or undervalued valuations, and that's it, okay? This is business. This is not gambling, okay? Very, very important, okay? Now, when it comes to people in terms of like when to sell stocks and when to sell stocks exactly, like I've seen so many different approaches, okay? And I want to kind of, talk about these approaches and why a lot of these approaches just aren't the right approach in my personal opinion, okay? Because I've seen a lot of these. These are like very, very popular. One approach I've seen out there many times is like if a stock jumps 20% and it goes up 20% from when you bought, sell the stock, okay? And sure, sometimes that can work, but here's where the problem comes in, okay? If you're buying into great corporations, great stocks, all right, they should go up way more than 20% over time. You're leaving likely a lot of money on the table if you're buying into a great corporation. So for instance, let's talk about this company, and I could give you countless examples of home run stocks I have in my portfolios that are up 100% plus. This company right here, right? I believed in it so much, bought into this company a couple years ago, Tesla, right? And I could have sold it after it made me my first 20%. Could have done that. The stock's up like 1,300% or some insane number since I bought in a couple years ago. That would have been a really, really poor decision. Imagine you bought into Nvidia or Amazon or Apple or Google or any of these great corporations. The FB, after it jumped its first 20%, and then you lose out on hundreds of percent or thousands of percent. And once again, that's just looking at stocks from like this short-term mentality, this gambler's mentality of it's just ticker symbols and numbers at the end of the day. And that's just completely the wrong approach in my personal opinion. And it's not, you're gonna limit your gains in a massive, massive way if you do that, guys, okay? Another approach I've seen is like a stock hits an all-time high, sell the stock, okay? Okay, so another one of those approaches that very similar to the jumps 20% one, where it's like, okay, if you buy into a great corporation, it should hit all-time highs a lot of times and then bust through those all-time highs and go up another 50%, 100%, 200%, okay? That's what great assets and great stocks should do over time. So to just say, oh, it's at its all-time high, time for me to sell, it's just completely the wrong approach. And once again, it's looking at it from a short-term perspective again, which I think is just the enemy of major long-term money, okay? Just the enemy of it, okay? Some people say, okay, when it stops going up and it starts going down, that's when you need to cash out. It's broken trend, it's going down now, okay? Another really bad approach, in my opinion, okay? We'll draw it back to Tesla, and there's, like I said, there's countless stocks I could draw this back to, okay? Where I'll invest in a stock, it might go up a little bit, or it might go down a little bit right after. So what, cash the money right away? Cash out that stock? That doesn't make any dang sense. If it goes down in the short term, I'm buying more. This is an asset that I love for many years to go in the future. Last thing I want to do is cash out of this great asset because, oh, it just started going down. That literally makes no sense. The market's open like the majority of days in the year, right? The market is very volatile. Like the stock market is very volatile. It's going to go up, it's going to go down, it's going to go all around, right? And good chance that stock's going to have volatility. Stocks don't just go up in a straight line and go up every day. We all know that, right? So at the end of the day, like, that doesn't make any sense. That approach just doesn't make any sense at all for somebody like myself or you guys out there. It's just the wrong approach completely, okay? Some people say when the technical indicators are overbought, okay? Here's another thing that I just don't get into the technical indicators. I've never bought or sold a stock in my 12 plus years of investing based upon a technical indicator saying it's underbought, overbought, anything like that. That's just not, once again, guys, you should be looking at this from a business perspective. I've basically ripped off Warren Buffett's approach when it comes to a lot of different things out there. And one of those approaches I've ripped off over time is the fact that you just don't get caught up in all that. You look at the stock market in assets, in businesses as like asset producers over time. And if you're making a business decision, you don't base it upon a technical indicator, okay? If you buy a McDonald's franchise, you don't sell it off because, I don't know, like burger sales were bad one day or something like that. Like that doesn't make any sense, right? You sell it off because you feel like you got a better place to put the money or something like that, right? Or you just don't want to be a part of that franchise anymore. That's why you sell it off. That doesn't make any dang sense, again, for somebody like myself or like the high majority of you guys out there, okay? The biggest investors in the world, they're not making business decisions based upon that, okay? I can promise you that. Like look at the richest 100 people in the world, okay? And I can tell you none of them are making business decisions based upon a technical. It's just not happening, okay? And it's like, where are you looking for your information, okay? Some people will say when the forward P is above S&P 500 average, okay? So here's the thing, okay? Not all stocks deserve to trade at the same forward P's, okay? Just because a stock has a 50 forward P does not mean it's a ripoff. It could have tremendous growth going forward in the future, and that actually might be a very undervalued stock. And something when I got first started in the stock market, my first few years, I made a big mistake in my first few years of looking at stocks as like everything should trade around the same level. No. If it's a great growth company that has massive growth ahead for like a decade into the future, it should trade at a premium and probably a nice big premium compared to where the stock market trades at. There's no way Tesla should trade at the same forward P as Pepsi, or there's no reason Pepsi should trade at the same forward PE as, let's say, Google stock, right? And there's no way Google stock should trade at the same forward PE as Amazon stock. Like growth rates are different. You can't just look at it from a perspective of this is higher than what the market's trading at. The market's trading at a 20 forward P. My stock's trading at a 25. Got to sell it off. No, it's not the way this works, okay? It's not the way any of this works, all right? So it's just not a right approach there. And the last one I see a lot of times, as people say, when the PEG, which is price to earnings growth, is over 1, that's when to sell off a stock, some people will say, okay? And so essentially, a 1 and under, people kind of look at that as like, if you get a price to earnings growth of 1 and under, a lot of people look at that as an undervalued stock. And if it's over 1, a lot of people say that's getting to overvalued territory, especially if it goes to 1.5 or 2 or something like that. Once again, it's just not the right approach, okay? You got to be valuing these companies based upon the management teams, based upon the long-term TAM opportunity. What's the total addressable market? What are the chances that company grabs a significant share of that total addressable market? What can the top line numbers be in 3 years out, 5 years out? And of those top line numbers, how much actually reaches to the bottom line for net income? And where's that market cap at right now versus that projected net income in future years? These are the type of things you should really be looking at. So, all these different approaches I hear talked about a lot of times, they just don't make much sense in my personal opinion, okay? And they're just not the right way to be looking at stocks in the general, okay? So you got to ask yourself, are you a trader or an investor, okay? Are you a trader or an investor? And if you're an investor, which the majority of folks that watch my channel, you're investors, okay? Like, this whole thing, you shouldn't even be looking at this, okay? Although you're going to hear it talked about a lot of times, you're going to see it on CNBC, you're going to see it on websites, you're going to see a lot of other folks talk about it. Like, if you're an investor and you're buying companies as assets, you should never worry about all this mumbo jumbo you're going to hear talked about all the time. If you're trying to trade stocks, day trading or something like that, or trying to get in and out, you do whatever you want to do, okay? But for my group of folks that are investors and are trying to basically buy income producing assets, stocks, great corporations, they'd rather give their cash to a great corporation and have ownership in that than keep that cash in a safe or in a checking account. For my folks, this whole deal over here does not make sense, okay? Let me give you my 4 core reasons for actually selling a stock, and let me explain these in kind of my thought process. And then we're going to talk about selling for tax reasons, because some people say, well, what if I want to sell for a tax purpose, okay? And then we'll talk about, like, what about selling for a high valuation? What if the company's overvalued, okay? And that gets into a whole different discussion about what is truly overvalued and what's undervalued, okay? So for me, what I have found over time is if I sell a stock for any reason other than these 4 reasons, it's almost always a poor decision. Almost always. It has to fit into one of these 4 decisions for me to sell a stock, essentially. And if it doesn't, then I should not make that decision, okay? And by the way, when I go to sell a stock, I never judge myself if the stock goes up more after I sold. Like, that's fine, okay? I'm making business decisions at the end of the day, not decisions based upon whether it might go up again tomorrow if I sold out, or next week, or next month, or next year. It's not the way I do things, okay? So for me, first thing I'm looking at is, do I need to raise some capital? If I need to raise some capital, like let's say I just don't have enough cash at a given moment, okay, which I'm pretty disciplined nowadays. I'm pretty good with always keeping the 10 to 30% of my net worth in cash, or cash and cash equivalents. I could mean money in savings accounts, checking accounts, wherever, okay, just easy to get to money. So I'm pretty disciplined with that nowadays. But let's say I got undisciplined for a certain amount of time and I was just buying stocks too heavy, and I got down to a very, very low cash number where all of a sudden I put myself in danger of, if the market goes down, like I can't take advantage of it. I can sometimes sell a stock to raise some capital. And this can make sense. And I've seen it before where some investors, they're like 99% invested and they got no cash on the sideline. So if we have any big dips in the market in 2021, they can't take advantage of any of that. Or if any great stocks go down in the short term, they can't take advantage of any of that because they have literally no cash, okay? And so if you need to raise some cash, sometimes it can make sense to, just sell a little bit of a stock. You don't even have to sell out of the stock completely. Sometimes you just sell like half the position, quarter of the position, raise some capital. And usually if you've got a portfolio of, let's say 10 stocks, right? You usually want to sell whichever stock you believe in the least, okay? That's usually the best way to do it. I just if I look at a portfolio of 10 stocks, 15 stocks I hold, there's always going to be 1 or 2 stocks in there that I can say, this one I don't believe in nearly as much as this one over here or this one over here, so let me go ahead and cash a little bit. Let me raise some capital, let me raise some funds, put yourself in a position of power. If you have no cash around, you are never in a position of power. You always want to have some cash around, okay? So very important, all right? That's one reason for selling a stock, okay? Next reason for selling a stock is if you have a big disagreement with the management team, okay? And they make a decision, and I have a perfect example of something that literally just happened in the past week or 2 of a situation with the stock with me, okay? If they make a big decision and you fundamentally disagree with that decision huge, and it turns you off so bad from the management team that you decide to sell out of stock, it can make sense, okay? So for instance, there was a situation recently with a stock I own called Fizzy Get Dizzy, okay? Well, I call it Fizzy Get Dizzy. It's actually a company named National Beverage Corporation, okay? This stock I bought heavily around like April time, okay? And I made a tremendous amount of money. Like I bought most of my shares in the 30s and 40s, and it's just been a beast. It's in the 90s something, and I ended up selling off in the 90s essentially because management made a decision recently to almost deplete the entire balance sheet for the next dividend payout. They went so crazy with the next dividend that it's almost going to deplete the entire balance sheet of the cash on the balance sheet, okay? And I looked at this and I said, this is such a flawed approach from the management team, and it's so short-sighted by the management team that I no longer want to be part of this company. And I'll take my, $50,000 or $70,000 or $90,000, whatever dollars it was across my different accounts, and Fizzy Get Dizzy stock, get out of it and cash it, because we have such a massive disagreement. Such a massive disagreement. I love that stock because of not just their main product, LaCroix, but I loved it because they had a fortress balance sheet. And now the company's going to deplete almost all the money on the balance sheet because they just want to pay out some gargantuan special dividend. And I looked at that and I said, that's not the type of decision making I want at a company I'm invested in. That is so short-sighted. So yeah, if you have a big disagreement with management, then it makes sense to cash it, okay, at the end of the day. There's no sense in ever being in a stock with a management team that you don't truly believe in, and you think they make poor decisions. And it's not a good decision to stay in a stock that you think the management team is making bad decisions. Believe me, I've been in a stock I've been in a stock before where a management team would consistently make bad decisions. I've probably been in a couple stocks like that before. It's not a pretty situation and it usually always ends poorly, okay? Next reason to sell, number 3 of 4 up here, is if you no longer like the fundamentals of the company, okay? If you no longer like the fundamentals, time to cash. And this happens sometimes. You might look into a stock, you might get excited about it. 6 months go by, 12 months go by, 18 months go by, 24 months go by, 36 months go by. And all of a sudden, you're like, I don't really like the fundamentals of this company. I think it's going to get way too competitive. I don't think this company has the right approach. I'm not seeing enough innovation in the products and services of this company. I don't like the fundamentals. If you no longer like the fundamentals of the company, it's time to cash, okay? There's no sense in being in a stock where you don't like the fundamentals anymore. It's another situation that's usually going to end poorly if you're investing in a stock and you don't like the fundamentals. Because at that point, it's like, what are you in the stock for? Because you hope it might go up? You hope you won't take a loss on it? You hope you'll take a bigger profit? These are all short-sighted things. These are all short-term mentality type things, okay? If you no longer like the fundamentals, bye-bye. It's time to leave that stock, okay? That's number 3 of 4, okay? Let's talk about the 4th one here, and then we'll get into tax reasons, high valuation, and I'll kind of wrap this up, okay? Better opportunity. If I see a better opportunity, I take the better opportunity. So let's say I have a stock and I have $100,000 in that stock, or the position's worth $100,000. And let's say that stock's gone up a bunch, and I see some other stock that I like a lot better long term, and I don't want to just put cash in that stock. I might go ahead and cash that other stock that's up huge for me and go ahead and invest that into the company I feel like is a better long-term opportunity, because I always want my money to be diversified, right? I can't just be in 1 or 2 stocks. That's too risky, right? I need my money to be diversified. Like, let's say I have an account that has, $2 million in it, okay? I'll probably hold 15 different stocks. So I want to be diversified in that account. But at the same time, like, I need to have my money in like the best positions possible, okay? And if I'm holding 15 stocks, those need to be the best 15 companies, in my opinion, in the stock market based upon like the risk reward standpoint from when I bought those stocks. And if one of those stocks is not that attractive anymore, and I see some other stock that I'm like, ooh, that one's really good, that one has huge potential, I need to go ahead and basically take that money and kind of move it over, okay? Alrighty, so last 2 things here we're going to talk about, because I know these things get brought up when it comes to selling a stock, okay? People say, what about selling for tax reasons, okay? I never try to sell a stock based upon tax reasons, okay? Short-term gains, long-term gains. Once again, you get into a mindset, if you're selling based upon tax reasons, you're getting into a mindset that is essentially saying you're not making a business fundamental decision, you're making a tax decision, okay? That's not what I want to do. Once again, if it's not in these 4, then it doesn't make sense. If it doesn't have something to do with me needing to raise capital, big disagreement with management, no longer liking the fundamentals, or there's a better opportunity for my money, if it's not in there, I don't care about it, okay? And so, looking at tax reasons, short-term gains, long-term gains, any of that, like my goal is to hold stocks for a year or longer, right? Because I'm taxed way less. But that doesn't mean I'll do that always. Like if I make a ton of money and then I feel like there's a better opportunity for my money out there, I'm gonna sell that stock even if it's a short-term gain, because at the end of the day, I'm trying to make the best business decisions for my portfolio, not the best tax decisions for my portfolio, okay? Let's talk about high valuation. This is the last thing I want to kind of talk about here, because this is a big one, okay? So sometimes people will look at a stock and say it's got a really high valuation on it. It's gone up a lot. The market cap is really large. The forward P has gone up a lot. Things like that, okay? So you get into some trouble with this one as well if you're selling out of a stock just based upon the fact that it's gone up a lot, or you don't like the forward P or something like that, okay? Because here's the thing, companies, great assets, they continue to innovate usually, and they come out with new products and services and game-changing things that maybe you weren't even taken into consideration at that time, okay? So for instance, an example of a great company, right, that you could have made look bad in the light of like valuation over time. Let's talk about Apple, okay? So I mean, Apple, there are definitely times in Apple's period, time period as a company, right, where it looked really overvalued at certain times, right? But with a great company, they continue to innovate. They continue to come out with great products and services and things like that. So for a company like Apple, right, I'm sure there was a time period when it looked overvalued, and then the iPod came out, right? And that was just a game changer for the company. And then obviously like iTunes came out, right? iTunes was huge for that company. Down the road, what did they have? The iPhone, okay? iPhone was just massive. Then they had iPad. Then services started to take off more, right? Then Apple Watch and AirPods and, you know, all these different things that just has helped the company grow and grow over time, where you could have looked at Apple stock and said many times that it was too high of a valuation. But great companies, great assets, they continue to innovate, they continue to push the boundaries, they continue to push up revenue and profits over time, because that's what great companies and great stocks do. Now, if you own a bad stock, they're not going to continue to innovate. They're not going to continue, and that's the type of stocks you want to stay out of at the end of the day, unless it's purely from a valuation play you're trying to do it, or a turnaround play or something like that. But great companies, man, they just continue to do things that change the business model forever. And so to look at something and say it has a high valuation, it's actually usually a poor decision to sell a stock, because there's a lot of stocks that, I mean, I've looked into Amazon for like over a decade, right? And all across my time, from the time I found that company, I said, this is a beautiful company. It's got a really high valuation. I don't know, man. And look what Amazon's done in the last 12 years. Like, pull up a 10-year chart, pull up a 12-year chart of Amazon stock. Look what that company's done, because that company is a great company. And although it's looked overvalued a million different times along the way, the truth is Amazon was always undervalued. It was always undervalued. So, hope you guys enjoyed this as always. Hope you got a ton of value out of this video. Hope this helps you out immensely in your mindset, your mentality, how you think about selling stocks and things like that. If you don't mind, smash that thumbs up button, smash it, and smash it again, because, obviously I'm giving out a ton of value in this, and I hope you guys really enjoyed it. And yeah, that's about it. Thank you for watching, and have a great day. If you want to join Stock Hub, it's free. Linked in the description.